What's up, you guys? It's Mason coming to you guys again with another video about investing, of course. Today we got top 10 tips for first-time investors. Please like, subscribe, comment, do the whole thing, and we'll get right into it. So step 1 in our 10 tips for first-time investors will be to establish a plan. Consider how much money you have available to actually invest, how much are you willing to lose, and what are your overall investment goals? So before you just jump right into the market, you want to have a general idea of what it is that you're going in looking for, and you at least want to know what you're looking at. Step 2 for first-time investors is understanding the risk. Not all of your investments are going to be successful, and you need to be comfortable with losing some of your investments. Some of the investment will go down before they go up. Some of them may go up right away. But you need to be comfortable and able to survive on a day-to-day basis as if the money was not there. Be honest with yourself when you're saying how much you're willing to lose, because these are, at the end of the day, your investments. Step 3 for first-time investors would be to make sure you familiarize yourself with taxes effectively. The last thing you want is someone knocking on your front door looking for money. Starting with a small amount of money may cause you to overlook tax information, but investments long term have potential to cost thousands in taxes if not followed carefully. Now that you've established a plan, you understand the risk, you follow taxes effectively, it's time for step number 4 for first-time investors, which is to diversify your portfolio. So back in step 1, I told you should establish a plan. And part of that plan should be doing research on your particular investments that you're interested in. But you want to make sure that you're able to spread your money across the board. You don't want all of your money tied up in one company, because if that one company goes down, all of your money is gone with it. But if you have some of your money in this company, some of your money in that company, some of your money in this fund, some of your money in that fund, you have a less likely chance of losing your money. But of course, I'm not a financial advisor and nothing is guaranteed. Step number 5 for first-time investors is try to avoid chasing these tips or investment gimmick groups. Chasing tips and paying for trading courses and groups can be lucrative at first, but it's financially draining, I can guarantee it. I have walked in the shoes, I've tried it all, and from my personal experience, it's going to take true elbow grease. You're going to have to sit down, study what it is you want to invest in, learn it, live it, love it. Step 6 for first-time investors is invest, don't guess. Warren Buffett said it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. A smaller company may be more risky because it is less regulated than a multinational corporation. Don't believe taking higher risk guarantees more money. You wouldn't bet on a pony in a horse race. Step 7 for first-time investors is invest regularly. Investing piece by piece instead of a large sum is often regarded as a better investment method by many professionals. If you were to take a large sum and break that large sum into smaller increments, you could then incur multiple entries into that same stock, therefore compounding your results. But you should learn more about that as your skills advance. Step 8 for first-time investors is reinvest. Unless you're looking for specific periodic income from your investments, many consider reinvesting capital income returned from funds or dividends back into their portfolio. It increases the value over long term. Step 9 for first-time investors is reassess. Once you've started, the process is continuous. You'll need periodic review of investments, personal circumstances, time frames, and risk factors, as all will have changed over time. For example, if you're closing in on your investment goals, you may choose some less risky investments. Step 10 for first-time investors, stick to the plan. Once you start, it's hard to ignore chatter about market movements, commodities, share tips, inflation, gold prices, and etc. It's endless. Stick to your plan. Thank you guys for taking the time to kick it with me on Mason's Finances. Oh, that ain't even it. Finances with Mason. There we go, baby. Please like and subscribe, and I'll see you guys next time.